Hi everyone, my name is Cynthia. So this is our first class on advanced taxation. So we're going to be starting off with basis of assessment, which is also known as basis period. So when talking of basis period or basis of assessment is a systematic procedures that the tax authority subjects companies and businesses to tax, right? So we also have terms in basis period. We have tax year, basis period, year ended, year to date, as well as period ended or period to date. So when talking of tax year, the tax year is the normal government fiscal year, like e.g. 2025, 2026, 2027, like normal fiscal year, which runs from January 1st to December 31st, normal year, right? So we also have basis period. So basis period has to do like when the period at which the profits of an organization, so the revenue of an organization is being matched against its expenses with the end goal of determining the profit or loss for that period so as to subject that profit to tax. Do you understand? Then we also have year ended. Yeah. So when we're talking of year ended, there are some accounting, there are some questions that will say year ended. So when we're talking of year ended is a basis period that ends that is exactly 12 months. Yes, it's exactly 12 months. Then we also have year to date. Year to date is a basis period that is either 12 months or it is less than 12 months. I come again. Year to date is a basis period that has exactly 12 months or less than 12 months. Then period ended or period two is a basis period that has exactly 12 months or more than 12 months. So now you see, this one has year ended has exactly 12 months, right? Year to date has either exactly 12 months or less, then period ended or period two has exactly 12 months or more than 12 months. So now what sort of the types of basis period, right? The types we have actual year basis and we also have preceding year basis. Yes. So when talking of actual year basis means that the income of that particular year is going to be subjected to tax in that year. For instance, um, let's say, let's say a company starts operation January 1st, 2020, and the accounting year end is 31st of December, yes, 31st of December every year, which means 2020. This is exactly 12 months, right? So we now say, okay, 1 January 2021 to December 31st of December 2021. So we now say, okay, YOA, that's years of assessment, is going to be 2020, 2020, then 2021. So you can see this accounting year end, this accounting runs from this year basis period runs from 1st of January 2020 till 31st of December 2020. And that same account was not well, that same profit or the profit of this period is still subjected to tax in that 2020. You understand? This one to 2021 is subjected to tax in 2021. This is actual year basis, right? But when it comes to CIT, okay, let me explain the preceding year basis so you get it. So we're talking of preceding year basis. Preceding year basis is when a period of a particular year is subjected to tax in another year. Let's say, for instance, period profit of 2021, yes, is subjected to tax in 2020 in 2022. 2022 is subjected to tax in 2023. 2023 is subjected to tax in 2024, just like that. So according to our example, this one is actual year basis. This is this is actual year basis. This is actual year. So we now want to give example of preceding year. Preceding year, we have 1st of 2020, 2020 to 31st of December 2020, right? 2020, then 1st of 2021 to 31st of December 2021. So in preceding year basis, this one now, this 2020 is going to be subjected to tax in 2021. Why this will be subjected to tax in 2022? So you can see the difference. But however, when it comes to CIT, yes, when it comes to CIT, profits are subjected to tax on preceding year basis. You understand? So they will allow the company to run all their operations in one particular year. Do you understand? Before it will now be subjected to tax in the coming year. For instance, profits of 2025 was subjected to of companies were subjected to tax in this year, which is 2026. But when it comes to actual year basis, example of or the type of tax that are being subjected to tax based on actual year basis, example is capital gain tax. Do you understand? But when it comes to CIT, it is preceding year basis that profits are being subjected to tax. Okay, so we also talk of the classes of basis period. So we're talking of classes of basis period. We have the normal basis period and we have the abnormal basis period. Now we're talking of normal basis period. Normal basis period are period that are normal. Do you understand? And the features or the characteristics include, it means that it is exactly 12 months. Do you understand? It is exactly 12 months. They are being profits are being reported on preceding year basis, right? And another one is that there are no gap, there are no overlap, no gap. Do you understand? It's like it's straightforward. So what we'll now also talk of abnormal basis period. So we're talking of abnormal basis period. Abnormal basis period is a basis period that does not have the characteristics of the normal. Do you understand? That it is abnormal, which means that it is not exactly 12 months and there are overlap. Do you understand? There are gaps. So that is abnormal. Now, I know your next question might be, okay, what can make a basis period to be abnormal, right? There are three things or three situations that can make a basis period to be abnormal. Number one is commencement of a business. Yes, of course, when a company is just commenced a business, right, it can cause abnormality. All right. So we also talk of changes in accounting date. Yes, when a company suddenly changes their reporting date, remember that every company has their reporting date, right? They can decide to choose whatever accounting date they chooses, right? Whatever reporting date they want to report their profits or however they want to do it, their reporting date. But whatever reporting date a company chooses, they have to be consistent with it, right? In a situation whereby there is no consistency, it means that there's not a change in accounting date. For instance, a company that reports profits, let's say a company that have accounting year end of, let's say, 31st December, yes, every year, 31st December every year, right? All of a sudden, they now suddenly change to 30th, let's say 30th of October, sorry, 30th of October. Do you understand? Every year. That means there's a change in accounting date. And when such occurs, of course, this is what creates abnormality. You understand? So we also have cessation of a business. There are also situations where company, they say they know they do again. They don't want to carry on the operation anymore, right? And when such happens, it means that okay, the company is ceasing their operations, which can also create abnormality in basis period, right? So now we're going to move straight to question. Yes. Okay. Okay, so we'll start with, so okay, so when it comes to this one now, we don't have issues with our normal period, you understand? So when it comes to CIT, it is the abnormal. that we are focusing on. You understand? So in this abnormality now, we are going to start with commencement of a business. So we are starting with commencement of a business. So now, according to Finance Act 2020, when talking of commencement of a business, of course, like we discussed earlier, when a business just commence operation, you understand, so it can cause abnormality and all of that. So now the steps is that number one, for us to identify this, for us to compute basis period, right? First of all, from the year in which the business commence operation. For instance, let's say a business commence operation 2020, let's say 1st of January 2020, right? And the accounting year end is December, let's say December 31st, 20, of course, every 31st of December. Right now, Finance Act said that it's going to be from the period, say from the period in which a business commences operation till the reporting period, to the reporting period, right? So to the reporting, that's the first step, that's the first. So the second one says, so immediately after the reporting period, a day after the reporting period, till the reporting period again, you understand, to the next reporting period, that's a day a day a day after the reporting period to the next, then three, like that, you understand, like that. So now we're going to solve a question so that it will demonstrate what the Finance Act said, right? We're going to solve a question. Okay, so now we have a question. It's a Lagbaja Nigeria PLC. So when we are solving, let's say I'm coming. Lagbaja PLC was incorporated on the 1st of March 2020. Please, year of incorporation is not important. Just ignore it. You are going to start from commencement, the date in which the business commences operation, right? So, and commence business operation on the 1st of April 2020. That's our commencement year, right? So the detail herein are in respect of the company. Period two. Period to 30th of September 2020. The adjusted profit for that period was 500k. Then year ended 30th of September 2021. The profit was 1.2 million. You see, this means that the company reporting date is 30th of September every year, right? So we now move to the third one, which is year ended 30th of September 2022, and the profit was 1.5 million. So required, compute the assessable profit for all the relevant years of assessment. Yes, this is what the question is going to tell you. All the relevant years of assessment. Now, it is your responsibility to tell the examiner, okay, these are the relevant years of assessment. Please don't go and put all the relevant years of assessment though. So let's start. First of all, we're going to state the name of the company, which is Lagbaja. Shit. Which is Lagbaja Nigeria PLC, right? So after that, we now say computation of basis period, computation of computation of company income tax, because the question code will give you company income tax for 20 something years of assessment, 20 something, because now you have to just leave that space first, because you don't know the relevant years of assessment yet, right? So you leave it first and go then proceed to evaluating your basis period. So now we're going to say, okay, the question they gave us, they said the business commences operation first of April 2020, right? 2020, and makes up its account to 31st. Okay, sorry. First of April 2020, right? This is going to be YOA. This is going to be basis period, right? And this is going to be adjusted profits. So now 2020 till the reporting year, which is 30th of September 2020, yeah, right? Then we now, a day after, according to the financial, immediately, like a day after, right? Immediately, a day after the reporting period, we now say 1st of October 2020 till 30th of September 2021. You see. So again, we now say immediately after again, because they gave us three years, right? Three adjusted profits, which means that it's for 3 years. So we now come again, okay, 1st of October 2021 till 30th of September 2022. Right. Now we now say, okay, so now using PIB basis, that's PYB basis, preceding year basis, we are going to say that the year of assessment of this particular one is going to be 2021, and year of assessment of this is going to be 2022, and year of assessment of this is going to be 2023. So you can see, so the adjusted profit for each of the year, adjusted profit. This one now, there was no overlapping. Okay, profit. So you see this, you see what we said when they said period 2. You know, we said period 2 is like a period, basis period, that is either exactly 12 months or more than, right? Then year ended is exactly 12 months. A year ended is exactly 12 months. So you can see this one now. So we now say, okay, the profit for each of this is 500,000, right? And for this one is 1.2 million. And for this is 1.5. This one is not, there is no overlap in this one. This is like normal basis period. You understand? It's exactly 12 months, there are no overlaps, and it's yes, there are no overlap. So you can see this. So in our next question now, we're going to solve illustration 2, so that you see in a situation whereby there's an overlap, right? Okay. This is when there is no overlap. Oh, sorry. So no, I forgot to add it in our this thing. So for the relevant year of assessment, which is 2021 to 2023 years of assessment. Sorry, I forgot to add it. So now we'll now move to, okay, you see it in the second question, Sha.
So we're going to solve illustration 2. So that question demonstrates a situation whereby there's an overlap, right? So the question says any company in Nigeria Limited was incorporated in September 2020, right? And started business operation on the 1st of November same year. Remember, incorporation date is not important. You only need commencement date. So now again, we're going to say any Nigeria, okay, Nigeria Limited, right? We now say computation of CIT for something years of assessment. We are going to read that one first because we've not computed the basis period, so we wouldn't know what the years of assessment are. So now we want to compute our basis period. We're going to say, according to the finance part, we're going to say YOA, right? Then basis period and adjusted profits. Now, basis period, say the business commences operation 1st of November 2020. Now say 1 November 2020 till, and what's the company accounting year reporting date, which is 28th of February every year. Now say 28th of 2 2021, right? Because this is November 2020, so the next one is going to be 28th of February 2021. So according to Finance Act said that the second one is going to be a day immediately after this one, which should now be first of March 2021 till the next reporting date again, till 28th of 2 2022, right? So we now again we now say 1st of 3 2022 till 28th of 2 2023. You see, so the years now is going to be dependent on the number of adjusted profit that is given to you. So let's go back and check our question. So our question says period to 2028 2022 period to 28th of February 2022 is 16 million naira. The other one 2022, okay, year ended 28th of February 2023, year ended 29th of February 2024, which means that they did not give us information regarding 2021 profits, because this one they gave us the period to 28th of 2 2022. Now remember that the commencement date is 1st of November. Remember that the commencement date is 1st of November 2020. And the first year profit they are giving to us is 28th of 2 2022. You see, from here to here they just jump straight, which means that first profit of 16 million naira, which means that profit of 2021 is inside, as well as profit of 2022, some of it is inside. Now we're not going to say, okay, from this period to this period, how many is there? How many? Now say November, 1st of November 2020. Now say November, right? December, January, February, which means this one is 4 months, right? And this one is 12 months. Because when you calculate it again, add another one, that's okay. January, February, March, sorry, November, December, January, February 2021, right? We now say okay, February, March, April, May, June, July, August, September, October, November, December. You see, December. Then to the next one, which is 1 December, February, December, January, February. You see, so when you calculate, now say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Which means that that first one is profit for 16 months. So since this one is 4 months, we are going to prorate it by removing the 4 months profit from it, so that we can allocate the remaining one to the other 1 year. So we now say 4 months, that's 4 over 16 times 16 million, right? It's going to give us It's going to give us 4 million naira. 4 million. Right? Which means that the adjusted profit for this year from 1st of November 2020 to 28th of February 2021 is 4 million. So which means that automatically the remaining 12 million naira is for this month, right? But if you still want to calculate it, maybe you still want to calculate, you can say 12 over 16 times 16 million. 12 divided by 16 times 16 million, which is 12. Still give us 12. Alright? Still give us 12 million. Now we've gotten our profits. You see there was overlap. Instead of 12 months, they gave us 16. So it's not your responsibility after you determine your basis period to compute it, right? So the one of 2020, so the one of year ended 2023, now 2023 profit will now be 15 million. 2023 profit is 15 million. Accordingly, it's 15 million based on our question. Then another one, because the next one we are going to, your basis period is determined by the number of profit you are giving. You understand? Number of adjusted profit you are giving, and in the case where there is overlap too. So this one and the adjusted profit they gave us is 3, but because it's overlap, that's how our basis period is going to be 4. So we'll now say 28 of 2, 2024. Profit of 18 million. Right. So now our YOA, which is account years of assessment now. Since this one is 2021, this profit of 4 million is going to be subjected to tax in year 2022. So this profit of 12 million is going, which is in 2022, is going to be subjected to tax in year 2023. Then this profit of 15 million, which is in year 2023, is going to be subjected to tax in year 2024. And this profit of 18 million, which is in year 2024, is going to be subjected to tax in 2025. Now, which means that our relevant years of assessment, computation of CIT for relevant years of assessment is from 2022 to 2025 years of assessment. You can see. We now say for 2022 to 2025 years of assessment. So you see, please don't write down, just 2. So you can see It's important for you to compute your basis period first. Just leave that one so that when you are now done, you will not fill in the gap. But please don't forget to fill in the gap. You must fill in the gap. But don't write relevant years of assessment. You have to determine your basis period so that you can put in your relevant years of assessment. This will not be your relevant years of assessment, the while way. Thank you. So in our next class, we are going to be discussing the other abnormality, a situation whereby there is changes in accounting dates. Yes. So thank you. Please kindly like, subscribe, and share. See you on my next one. Bye bye.